Hey everyone, my name is Mo and I'm the founder of ATZ Finance. Welcome to the ATZ Finance YouTube channel. So, we're sat here today in a podcast and you're going to see a lot more podcasts coming out from us. What we want to do with this channel is we want to sit down with business owners from all different industries, find out what it takes for them to run their business, what works, what doesn't work, and hopefully we can take away a couple of lessons from that. So with that being said, I'd like to introduce everyone to Nilesh Kavya, my business partner and the co-founder of ATZ Finance.
Hi there, how you doing?
Not bad, how are you, right?
Yeah, new environment, new place, right?
There you go, you ready, yeah?
100%, let's try this out. Let's see how
All right, cool. So look, let's get straight into it. So tell me, why do you work in commercial finance?
Why? Change of environment, change of pace. My previous company, I was there for 23 years. This was a new opportunity, a new challenge, and it comes to a point where you just got to try something new
Okay.
and just go in and see how it goes.
All right, so you essentially transitioned from working for a company to now being a business owner, right?
Yeah.
Nice.
Coming from an employed environment to trying something on your own and then going through the motions of what other businesses go through as well.
So that previous role was B2B as well, right? When we say
B2B.
B2B, we're talking about obviously business to business.
Business, directly business to business. So
And now doing even more business to business, yeah?
literally now the market is purely business to business. We don't get involved in any of the consumer space.
Okay, so what is it that you do for businesses?
Business, we help them improve how they run their business, not necessarily the business itself, more the back end operational side of things. We're talking cash flow, money, leverage, debt, educating them what they can do differently. So it's more about not how can they go out and get more sales. We're not involved in that. We're involved on how can the business borrow money and leverage it within their own business to make more money.
Right. So you're helping businesses with their finances essentially. And when we're talking about finances, we're talking about access to capital, right?
We're talking about the D word here, which is debt.
Debt, okay. And the M word, money, right?
Money, yep. But then we're borrowing it. So technically it is a debt. So you need to go eyes wide open,
Okay.
borrowing it, and then you're utilizing that within your business to either buy something or invest somewhere.
Okay. So look, let me ask you, right? Look, we're talking about businesses taking on debt, which, as I know, in some finance settings, bigger businesses usually are fueled on debt, right?
100%.
But you're working more with the SMEs, right? We're working with small to medium businesses.
So our forte is your small to medium enterprise.
Right. And what is their position? What's their view on taking on debt?
Mate, it's a funny conversation that is.
Oh, yeah.
You've got some clients that are really open to it. They like to borrow. They're just constantly looking for the next deal. How else can I leverage my business even harder? How can I get more money chucked into my business?
Okay.
By just buying more equipment, machinery, plant, all that kind of jazz.
Okay.
Then the other side, you've got your traditional business owner.
Right.
May have been in business for 20, 30 years, or generational businesses is the best way of describing it. Yeah?
Okay.
Where someone's inherited the business, but their mindset's been not to borrow.
Right.
They've come from a mindset, you've got to do it all yourself. You've got to hustle, you've got to work harder, do more sales. But they're taking the harder approach. And I would say they're not working smart. And the reason why, they don't understand bad debt. It's not bad debt in the sense that you can't pay for it. It's understanding how to utilize that debt.
Okay. So let's unpack a couple of things here, right? So when it comes to businesses and helping business owners with taking on debt or taking on extra capital, right? Does every business at some point or another in their journey need to take on debt? Can a business go through, a 10-year, 20-year career without taking on debt?
They can, but can they scale?
There
Give an
you go.
example. I tell my clients all the time. This is a simple analogy to work it out, right? Let's say you want to buy a new company van or a truck. The most simplest thing, or a company vehicle of some sort, yeah? That company vehicle is equivalent to an employee. Hear me out on this one. So would you pay your employee 3 years' wages up front, or do you pay them monthly? Most people pay them monthly, right? The outcome's the same. You're going to pay your employee a certain percentage for a certain period of time, or a certain value, right? Let's argument say an employee is getting paid 30 grand a year.
Right.
30, 60 is 90,000 pounds. Do you pay that employee on day one 90 grand, or do you split it out? Same thing applies to a cost of a van. So the van may cost you 35 grand.
Would you pay it all up front or do you pay it off monthly?
Exactly. Now, do you make sure that van's working for you every single month? So the van goes out to work, does a bit of stuff for you, you earn a bit of money out of it, and you pay that percentage back they've earned to do the job. So the van is now an employee.
Okay. And essentially you want to make money off that asset, right? So whatever the asset is that your company's taken on
Exactly.
needs to generate revenue.
Like most employees, like to people out there as well, if you've got an employee working for you, if that employee is only generating less than you're paying them, are they worth keeping? So an employee you're paying to go out there and you pay them, say, 10 grand a month. Arguments, keep numbers nice and simple. But that employee needs to generate for the business at least 20 or 30 to justify their role. Because if an employee gets paid a third of what they bill, most businesses, most B2B businesses, you get paid a third, because a third gets paid to the employee, a third of that gets used up in taxation.
Right.
The other third is left as company profits.
Okay.
And most people can relate to that. And if I'm wrong, please comment below.
Yeah.
I'd like to just understand, that's my understanding of it. And that's the kind of understanding we have from our clients as well.
All right. Okay.
So the same thing applies to a van. So the van may cost you, say, £500 a month in lease payments, or would it be HP or loan payments to go with it?
Right.
But that van's now generating you £2,000 to £3,000 a month because it's out there working. It's a tool for your employee to go out and do the job better.
All right, look, we're talking a lot about debt, right? We're talking a lot about businesses taking on this type of debt. I mean, trying to move away from the D word here, right? But
let's reframe it to the word mortgage then.
Fine, mortgage, but whatever. But what's the form of it? How's this money being? Is it asset finance? Is it loans? What's out there that businesses can use?
It depends on the industry.
Oh, yeah.
So if you break it down into sectors, let's take the most simplistic form right now, which is your hospitality sector.
Okay.
Which is your restaurants, your fish and chip shops, your small cafes, your small single unit things on the high street.
Okay. Most like a chicken shop.
Chicken shop, perfect.
Okay.
Or even fish and chip shops are really good, right?
Okay.
They're all card-based payments. So these guys will take something called a merchant cash advance. So they base it on their credit card sales. So the reason why they would do that, they'll get the money in to buy more stock. So obviously they're on a ratio of paying stuff back, stuff coming back into the business. It's all about cash flow.
Okay.
The benefit of borrowing money is cash flow. It's not necessarily is it good or bad. It's how can you fund yourself from this month, next month, take an anomaly, VAT debt, all these kind of things to go with it.
Right. Because the reason I asked you that, right, was because let's say, going back to your chicken shop example there. So your chicken shop owner, he needs to take on X amount more money, right, to buy stock or maybe to open a second branch.
Pay for a new, realistically, the fryer might have broken. Plant and machinery.
Yeah.
Takes on a delivery driver. He's trying to expand his business. If he's trying to do Deliveroo or some sort of in-house delivery service.
Yeah. So what you're saying is, in that scenario there, you wouldn't go down the traditional route of just going out and getting a business loan. You pivot to what you mentioned, the merchant cash advance.
How quick it is. So a business loan would work for somebody, but the business now has to prove the president to pay it back.
Right.
A business loan sounds easy. That used to be the traditional way of getting money. Traditionally, it's got back 20, 30 years.
Okay.
You walk into a bank branch. You just talk to your bank manager. The bank manager will make that decision for you. He'll sit there, do the application. Now, it's just open banking, portal-based lending. The human interaction is gone. Numbers and stats speak for themselves.
Right.
It boils down to, okay, can you get in the business route? Yes. Then you'll present a business plan. You get so much work involved to get.
It's a lot of work then for the business.
A lot of work. And most people walk away from it.
And what would you recommend then for them to do?
Or something like that. Look at their straightforward. What's a simplistic way of doing business? Right now, it's all about, let's not overcomplicate it.
See, I would have said use a broker.
100%.
Would you recommend using a broker?
100%. I'm talking from a broker's perspective. Sorry. I didn't realize we were trying to apply it from the clients, but I'm assuming that I'm already talking to the client.
Yeah. I mean, no, just talking about like people out there listening, right? So all your chicken shop owners out there listening right now.
Small businesses, yeah.
What should they do?
Speak to a broker.
Why a broker?
Okay, why a broker? The broker's not incentivized to go one place to another place.
Oh, yeah.
So I'm not incentivized to give you this particular product or this particular product. I'll just present what the market dictates you can get.
Who do you work for as a broker? Whose interest do you have at heart?
Clients.
The clients, yeah? Not the banks.
Not the banks, no.
So a bank says to you, look, do all of your business through us. What would you say to them?
Not really, no. Because why would I put myself in a position where I'm only selling one product?
Right. So you're impartial then, yeah?
100%. And the reason why we're impartial, we can play banks off against each other.
Okay, fine.
So if one lender's giving this particular deal, another lender's giving this particular deal, it all depends who wants the business.
Ultimately, it's the client you're trying to serve, right?
Exactly. So the client will always get presented 2 or 3 options.
Because this is the thing, right? Like when I talk to business owners all the time, I know that it's crucial to have good tax advice in your business. It's good to have a good accountant that you can ring up regularly. You can go through your financial numbers and everything with them. It's obviously good to have a good solicitor in business as well. Definitely. Legal things can crop up. So in addition to that, business owners, what we're saying is you need a good broker in your corner.
Definitely. Right? As much as you trust your solicitor, as much as you trust your accountant, they will give you the information. An accountant may tell you to do this or that. And that's why we work very closely with accountants.
Okay.
Because our paths are aligned.
Right.
Because all we want to serve is a client. So if the client doesn't get funded, they can't expand.
Of course.
And we're in a position right now in this particular business where we want to see our clients succeed.
Right.
And they may take some bit on today. Once they pay that back off, they know they can understand they can grow it and cash flow out of it. They're looking for the next deal, the next deal. They recommend their friends, their family, other businesses they own.
Okay.
It's all about growing that remit and giving the right, I would say advice, yes, or the right information. The difference is most people will give you advice, which is an opinion.
Okay.
Do this. I recommend this. I think this is what you need to do. We don't work that way.
Right.
Give you the information and utilize yourself and think about it. Okay, if I borrow this, I can do this. Let's present options.
Okay.
We're not here force feeding the client to go with you. It's okay to say no, and it's okay to say yes. And that's the difference in how we want to run this brokerage and how we run our clients that we're working with right now, that it's okay to go both directions without feeling pressure. Right? When you go to a bank, they give you a solution, they pressure you into something.
Of course.
Because they've only got that one thing in mind.
Yeah.
They can't pivot. The difference with a broker is they can pivot.
Okay. Interesting. I mean, look, man, one of the things that I'm really interested in is, the next generation of people getting into business, right? So I've spoken to quite a lot of young people, and business is quite appealing, right? It's an interesting lifestyle, would you not say?
Oh, definitely. There's definitely perks and quirks to go with it all.
Yeah.
Freedom of time.
Would you recommend others to get into business?
Definitely.
Yeah.
Because at the end of the day, if you don't do it, you won't know, right?
Right. And what's the challenges though? What's one piece of advice that, look, let me ask you this, right? What's one piece of advice that you could give either yourself from, I don't know, 8 years ago, like, well, I'm joking, or someone that's young out there, right? Someone that's watching you thinking, do you know what? I want to get, this guy's talking about business. I want to get into business. What's one piece of advice that you'd give to that person?
I would say definitely understand your numbers.
Okay.
Be realistic with your numbers, but understand them.
Okay.
And what I mean by that is look at MI, your management information, or your basic cash flow, your business plan. Go back to the basics of it all.
Right.
What do you need? Any business you go into, what do you need to keep the lights on?
Okay.
What's your break-even point?
Fine.
At what point do you become profitable? And what choices can you make? Do I do this or this?
Okay.
Because everything has a cost.
Right.
Whether it's monetary, emotion, or time.
Right.
There's a proposition somewhere, right?
Okay.
And then it also boils down to what you're prepared to take, and what you're prepared to give.
Okay.
At what price point do you sell your service? At what price point don't you sell your service? What's your worth? And there's a lot of information. I know you said a simple question, what's the one thing you take away? I would say out of all of that, after thinking about it, is know your worth.
Know your worth, yeah? In business, know your worth.
Know your worth.
Know what you want to do.
100%. If someone tries to sell you something, or you're trying to buy something,
Right.
you know what it's worth, right?
Of course.
Why do some people shop in Tesco's and why some people shop in Marks and Spencer's? They know their worth, they know their product and their service to go with it.
Okay.
And the same thing, if you're selling a service, if it's tangible or untangible,
Right.
know your worth.
Okay. One thing I'd like to add to that actually as well is if you're thinking about starting out in business, get in touch with a broker. Find out, it's good to have people in your corner, right? To support you.
Speak to a broker, understand what's out there for your particular business. How could you scale it? Are you talking to people of similar brokerages? Or not brokerage, are you talking to people in a similar industry?
Okay.
Like we talk to other brokers all the time. Some of my closest friends are brokers and we compete in the same space. Because you have to have the understanding that there's synergy out there as well. You may be competing, but there's synergy as well.
Yeah, of course.
Because every client's different. Some people may attract working with us. And likewise, some people may attract working with another broker.
Okay.
There's enough out there that everyone can be happy.
No, fair enough. So, look, man, we've been talking about businesses. We're helping businesses grow by helping them with their money, helping them take on more capital for their cash flow. What else can we do? Like, what's one of the most interesting things that you've had to broker a deal on?
Recently?
Go on, give us some case studies.
There's been some quirky stuff come through recently.
Oh, yeah? I heard you did a crane once.
Did a crane?
Oh, yeah?
Pretty much one outside on the building over there. So it's that one.
Yeah. How much was that?
That was £500,000.
£500,000 crane.
£500,000. The client had 3 of them already.
Oh, wow.
I'll tell you the background. This is quite a good story. The client had 3 of them already.
Okay.
Went to purchase the 4th.
Okay.
Their funding line got changed by the lender they had because they used to go direct. They didn't go through a brokerage.
Oh, okay. So hold on, wait. They went direct. So this person that wanted to buy a crane, they went direct to the bank, bought 3 cranes.
It was a asset finance provider.
Fine.
So I wouldn't say they went to your NatWest or your high street banks. There's specialist brokerages out there. Specialist lenders is the best way of describing it. They went direct with it. So, okay, we've got 3 already. I'm going to buy another one. And they're like, simple. You can't have it. Your credit line's maxed out.
Wow.
So they have a certain credit line. Because no one packaged the deal. What broker does, packages the deal. They puts all the ingredients together, then presents the case.
Okay.
Not just this one bit of it.
So it's more likely to get accepted than by a lender?
Yes, but then you look at each lender's criteria. So if they maxed out on lender A, lender B is in the same space. But the client doesn't know that because these lenders don't advertise.
Of course.
These lenders only work with brokers because they don't want direct consumers or direct people knocking on their doors. They only work through brokerage.
Right.
That's the business.
It's like private lenders then, really.
Privately, they are Main Street lenders,
Right.
but they don't advertise. You can't go direct. You have to go through an intermediary
Okay. Fine.
because they want people to come through a qualified, due diligence is taken care of.
Okay.
All this paperwork set up correctly. So the file goes on the desk ready to sign off. And that's where we come in.
Right.
So they went to lender A. We know that lender B, C, and D are in the same space. If this one doesn't take it, this one will, then we can work through the process.
So you've got the crane sorted then?
Yeah, we had literally, they employed me on Wednesday.
Okay.
I had it funded and delivered by Tuesday.
Oh, wow. There you go. Less than a week to
Less than a
fund
week. And
half
that was
of
£500,000 funded. The client did put a deposit down, obviously, and VAT deferred, a few other bits and pieces about it. But the cash flow was there. The business was ready to make the purchase,
it. Okay.
but he had to do the deal
Interesting.
because his rental was going back.
All right. So you funded cranes.
Done a
Give us-
farm, doing a farm right now.
Oh, yeah. A farm.
Literally, it's a distribution company for what's the best way to describe it? They're a dairy plantation. It's a
Okay.
dairy. So a dairy, basically.
Dairy
Not your traditional cow dairy. They put that on the site. This takes a dairy product, the cream of it, and makes other products out of it. Butter, buttermilk, all those.
Why would they need a loan?
Plant and machine, they want to expand.
Right.
But they're refinancing the farm. It was held in a family trust for a number of years, generational.
Wow.
Now the son's taken the farm over himself.
Okay.
So the father's allocated a patch of the farm.
Right.
So the separate title, separate deeds, all that kind of jazz. We're leveraging that now so they can expand and grow the distribution side of things.
Oh, fine.
So the plant and machine, so they couldn't get traditional asset finance on it because they've got some machine and plant in there already.
Right. Right.
They're refinancing the land
Okay.
to invest back into the business.
Okay.
So when it comes to your non-traditional lens, this is a non-traditional lens.
So you're telling me, right? We obviously I know the answer to this, right? But we also do property deals as well. Then, yeah, is that what you're trying to allude to?
Standard bricks and mortar.
Oh, yeah.
So bricks and mortar, which is your commercial units, residential, buy-to-lets.
Okay.
As long as you don't live in it, we can fund it. Best way to
Right. So yeah, just to clarify for everyone as well, listen, right? So the mortgage market, the property market is kind of split down the middle. You've got regulated and you've got non-regulated. Your regulated property deal is done by your qualified mortgage advisor. And that's where you're living in the property. If it's your principal residence, isn't it?
Principal residence, yep.
If you live in that property yourself, that's classed under a different type of mortgage, right? What we do is we do your non-regulated mortgages,
Commercial lending. So
commercial,
B2B.
which falls under commercial lending. So essentially what that is if it's a buy-to-let property or you're going to be using that property to make money, so it's going to be rented out, it's going to be developed, it's going to be flipped or sold in any type of way, then we are the type of broker that you should be speaking to about that.
Definitely. Like, basically, in summary, is your non-resident. As long as you're not living in it, we can do it.
Right.
Is the
Because
best
people
way-
get confused. When you talk about commercial, people think that residential properties don't fall into that.
People think commercials are actually shops and something big.
Exactly.
Tower blocks and
Yeah.
like really things that don't fall in the
But I heard that you done a recent, actually it was what, last week, wasn't it? You done a bridge loan, right? That's another word that people don't like, the B word, yeah?
Yep.
So
The reason
tell
I
us a
don't
bit about that.
They don't understand what a bridge loan does. Traditionally, a bridge loan sounds like a very expensive way to borrow.
Okay.
That particular case was a auction property. So one of my clients he set up a new limited company,
Okay.
which is an SPV, a special purpose vehicle. So they set up a company dedicated just to buy and sell investment properties,
Okay.
which we can go into further detail later on in some other videos about that. That's just another whole different thing. Here's how they set it up to go with it.
Fine.
So the client set up a special limited company just to do property with.
Okay.
They went to auction, they found a property.
Fine. Then what?
It was like 230,000.
As auction, you got to pay pretty quick, man.
You do. Now, this gets interesting. The property was already below market value. So BMV.
As it should, right?
Another firm that comes up. So it was already discounted heavily what it's currently worth because of the repossession, the current tenant had some issues, the banks wanted to get a quick sale on it. So they came at auction. They had 21 days from the minute the hammer went down to complete.
Okay.
So that's your timescales given, 21 days.
Right.
With auction, either you buy in cash or you borrow the money. And with a bridge, you can traditionally get drawdown within 14 days,
Okay.
subject to legals and valuations.
Sure.
So we had the valuation done, the legals were done. We managed to complete that property in less than 19 days from start to finish. And that was on a bridge. Now, what a bridge is just a quick way to borrow money, short term. I wouldn't recommend it long term. 6 months, 12 months tops
Okay.
on that one, depending on what you're doing to the work. And now the client's going through a process of refinancing that, or call it refi, onto what it's worth at the open market value. So a bit of work to the property, new kitchen, new bathroom, carpets, made it look pretty again. New doors and that kind of jazz. Now the property's gone up to nearly £330,000.
Right, right.
There's nearly £100,000 uplift. What he paid to what it's worth.
Okay.
And the lender we've placed him with will now give you a mortgage at, say, 75% on the current market value.
Right.
So yes, the client purchased it on a bridge at 230. He can refinance at the other end and put in or take out a majority of their spend to buy that property. And now they're sitting on an asset which is growing and appreciating, but limited cash is tied up.
Right.
So this is where the education and understanding and working with the broker can do 2 or 3 things, because a bridge was done by one lender and the exit done by another lender.
You know what, if I'm not mistaken, you've actually got a podcast coming up with the lender that done this deal for you, right? So you'll be deep diving into that.
That'd be a deep dive into that deal, how the structure worked out and how this particular lender worked on this bridge.
Amazing.
To go with it for the information side of things. So this is why people can't come to a broker.
Right. So what we're talking about, look, we're doing property deals here. We're doing business deals. We're helping businesses get money, getting properties make money. Essentially, you know, what do you want to say to?
We do asset finance as well.
Okay, asset finance. What's that?
So asset finance is something soft, which is software, laptops, IT equipment, servers, anything to help your business grow.
Is there anything that you can't fund?
Your holidays.
All right. Well, you got credit cards for that, right?
That's personal debt. That's a different type of debt altogether.
Fine. Oh, yeah.
But in terms of what we can't fund, there's always a funder out there looking to fund it.
Okay.
To give an example, there's a funder out there, but also
you know what? Sorry to cut you. Let me just ask you that question, right? You're talking about funders, lenders, all these big words. Maybe, you know, someone out there might not understand. You know, how many banks, how many lenders? What's the difference between a bank and a lender? Give some examples of who you deal with.
Okay, so banks.
Don't be afraid to drop some names, you know.
We could do that. We're not sponsored by anything, but we can definitely drop some names on that.
Okay.
So there's, in terms of, okay, let's go back to your traditional bricks and mortar lending. Yeah?
Right.
Let's go to property. Let's go to property first of all. If you think property, most people tend to think Nationwide,
Right.
NatWest,
Okay.
Lloyds,
Right.
Cooperative, anything you see on the high street,
Sure.
traditional lenders, right? On the back end of that, you got challenger banks.
Okay.
Now this is where it gets really interesting. Challenger bank is your non-traditional bank.
Okay.
The best example of a challenger bank right now is Metro.
Right.
Go back 20 years when Metro first started in the UK. They had branches open on a Saturday, a Sunday till 8 p.m. They were breaking the norm. So they were doing things where traditional banks are not doing. Your traditional bank would not be open on a Sunday. They'll close at 1 o'clock on a Saturday, and that's it. Do what you want to do. So these guys came on and broke the norm. So they're a new player.
Right.
So when new players come on the market, other things change.
Okay.
People need to change their game. So evolution, right? So Metro is a non-traditional lender we work with. Then you got HTB, Hampshire Trust Bank. They're a big lender.
Okay.
They specialize in the property sector. So these
Some names that some people out there probably never even heard of, right?
Until I started working in space, I had no idea these people were. And there's over 200,
Ballpark figure, how many lenders?
200 lenders.
Oh, wow. Okay.
200 you can just think of.
Fine.
In terms of commercial buy-to-lets.
Because everyone knows the big five, like you got Barclays, NatWest,
Standard,
Lloyd, Santander. But then there's these other lenders.
These are broker-driven lenders.
Right.
You can't go directly to them. They're broker-driven. There's other people out there who specialize in certain sectors of the marketplace, who specialize in, let's say, bridges or auction purchases. Your traditional high street bank will not be able to do an auction purchase.
Of course.
They can't work that quick.
Right. But whereas some lenders will definitely.
Because that's not their primary focus. Like your high street banks are regulated purely not around the commercial side of things, but in your own residential purchase. That's their core market. Your mums and dads who live at home, that's the traditional banks are servicing right now. Small investments, small pensions, and that kind of jazz. We're looking at the other side of things right now.
So what we're saying is like the market's changing, right? As you know, times are changing as well. More and more lenders are entering the market and they're becoming quite specific, right? So
very specific.
Auction purchases, you've got one type of lender.
Then you've got some other lender. We've got a lender podcast coming up soon with MFS. And these guys are completely unique in the marketplace.
Oh, yeah.
How they do their funding.
Okay.
They offer certain propositions with 6 months, no interest to pay.
Right.
There's no payment. So
why would that benefit someone?
Okay, so imagine you're buying a business.
Okay.
So you decide, you know what, I work for, let's take the garage industry.
Okay.
Right? There's a mechanic working down the road who works for, say, Quick Fit. He decides, you know what, I'll start my own garage one day.
Okay.
He finds a site, or he or she, finds a site. They buy the site.
Yeah.
It could be politically correct in it. So they buy the site, but now they've got no trading history.
Right.
So there's certain lenders out there who bank new businesses. As long as they put a deposit down, they'll give you, okay, you've got a 2-year product.
Okay.
So your 2-year product. For the first 6 months, you don't make any payments. So it gives you enough. So instead of paying a mortgage on the property, that's 6 months you've got deferred. you can put back into the
So
business.
you've got a window there,
You've got
basically.
a window to grow your business.
Right, which is that first 6 months, which is the most crucial part, really.
100%. That's when most businesses fail within the first 12 months.
Right.
So these lenders are giving you 6 months grace. Yes, you put a deposit down.
Okay.
But now you've got 6 months of no mortgage payments. So now what do you do that 6 months? You could either buy your machinery.
Right.
You can buy your ramps, your tools. You can asset finance certain things. But that would be difficult because you've got no trading history. So who's going to bank you when you've got no trading history, right?
Okay, so tell me a bit about, and tell us, right, the audience as well, why it's important to have trading history. What are some of the things? So, okay, you're there arranging these loans, right? Businesses have come to you. They've said, you know what, I can't do this. I don't know who I need to speak to. You're the man to help me. What is it that a bank or a lender would be looking at when it comes to any type of loan?
Anytime, initially, if it's a startup less than 12 months old,
Yes.
it's a bit difficult because there's no history.
Okay.
And that goes back to your initial B2C side of things, business to consumer. When you're a consumer, you've got credit history, like your own personal credit file. You've had it since you're 16, 17 because you've got a footprint. You've shown history, payments, history to go with it. When you're a business, you're fresh, like you're a new entity. So you need 12 months of trade or a very good business plan.
Okay.
I've got this contract coming over here. It's going to be worth this much. These are signed agreements. And a lender would look at it, not just an algorithm, but someone we can speak to and present your case.
Right.
They may not give you all the money. They may give you a solution. They could try invoice financing, for example. Let's do this bit. Let's improve your liquidity somewhere here. But it's only by having a good, clear understanding of your own business.
A good, clear business plan.
Business plan is one thing. Cash flow forecast is another thing.
Okay.
Where's the money coming in from? So if you're going to borrow £10,000, how are you paying that £10,000 back? What's your plan?
Okay.
So I've got these contracts in place over here. That'll give me the ability to pay this back every single month. I'm going to draw down this much wages for myself. This is my rent. This is my savings.
Right.
And at the same time, if your business is brand new,
Right.
you can put what they call a personal guarantee down.
Okay.
So that means your own house.
Fine.
As long as you put some skin in the game,
Right.
as long as you're prepared to put something into the business, a lender will back you and say, you know what, you're putting something in, I'll put something in.
Okay.
And traditionally, it's about 25%
Right.
deposit or thereabouts.
Okay. Sure.
So then it's like leveraging what you currently have. But then it's understanding, speaking to a broker again.
Right. Right.
How can I use my residence? I've got equity sitting in here right now. How can I leverage that? Not directly, but how can I put a security charge against it to give me the business over here? Then you're backing yourself now.
Okay. Sure. So that's quite important then. A lot of,
It's just aligning and understanding it all. Yeah, it's not
Right.
just about getting on with it and just applying, because 3 out of 5 people apply for the wrong product.
Oh, wow. 3 out of 5 people.
3 out of 5 people apply for the wrong product, thinking
Yeah,
they
because
want
obviously
this.
if there's a million products out there, how do you know which one, right?
Exactly. But if you're doing it yourself, what do you apply for? So when you apply for a credit card, personally, let's go back to a simple way of looking at it. When you apply for a personal credit card, right, you jump on these dual cost comparison sites, right? They offer 3 or 4 things, don't they? 0% purchases, there's balance transfer, cash advance, or lifetime interest rates. Which one do you choose?
I have no idea.
There you go, right?
Yeah.
You look at your own circumstances and you think, okay, this one sounds great. I'll just click on that one.
Yeah, there's no one really to speak to. You don't.
No,
Yeah.
I don't need to, or some people take a credit card out. I don't need to transfer any money, so I'll just take whatever one.
Right. Okay.
Or some people trying to move money around, so there's a purpose behind
So
it.
you're like a comparison website for business loans, there basically.
Pretty much, yeah.
Okay.
But then it's understanding what's needed. Yes.
With more of a personal touch, basically.
Definitely a personal touch.
Right.
It's not just send us an email, we'll come back to you.
Okay.
It's get to know the client. The more I understand about the client, the better it is to help them.
Right.
So they may call up saying, I need a loan, I need a loan, I need a loan. And I might say, that's not what you need.
Okay.
Let's take time to understand what you need first.
I mean, I mentioned the other client that we recently onboarded, a gentleman has a cleaning company out there. He's recently taken on a big contract with, I believe it was a government body. I don't know if I can say which one, but yeah, it's a government body.
Get shut down.
So you know what that's like, right?
Yeah.
How quick is having the government as a client? How soon do you reckon they're going to pay him?
Well, they say 30 days, but realistically, they're going to pay it after 60 or
60 days, right? Okay, so let's just break this down for a second, right? So this cleaning company, new business, he's taken on a client, which is the government, right? He's cleaning head offices somewhere. They're going to be paying him after he submits the invoice on day 1. They're going to be paying him after 60 days, right?
Yeah.
But he's incurred the cost day 1, right? Because
He's got to pay staff.
Yeah, he's got to pay
materials, cost, there's
cleaning products.
yeah, basic information.
Got to pay for the parking outside.
Parking
yeah.
outside, there's operational costs.
Right. So he's having to put the money in up front and then wait 60 days to get his money back. Now, initially I discussed the case with you and you pointed him in the direction of invoice finance, right?
Yeah.
So how would that work then?
Okay, so imagine there's an invoice coming through for £100. Let's keep
Okay.
the numbers nice and simple. We wouldn't normally do a £100 invoice, but let's say, okay, I'll say £1,000. First invoice is £1,000.
Okay.
Either he pays that money out of his own pocket because he's got to send staff out, unless he's doing the work himself.
So
right?
that £1,000 is what he submitted to the client?
That's the client's invoice is £1,000.
Right.
That may include a certain amount of raw materials, a certain amount of labor, parking, operational costs, storage, running his own business, right? But that cleaning cost is £1,000 per clean.
That's what he's charged.
He's charging, right?
Sure.
The client is not paying them back for another 60 days.
Okay.
So now he's got to find £1,000 to pay that up front because he's sending his staff out.
Okay.
And he's not going to get that money back in for 60 days. So that's cash flow. So what we did with that particular client, that invoice, we invoice factored it, or invoice discounting, or how there's 3 or 4 terms for this.
I've heard the term using like selling the invoice.
You sold the invoice, exactly. So now this invoice, because it's a backed client,
Right.
we credit check the client first of all, not our client, but the invoiced client. In this case,
So the cleaning company's client
the cleaning
is
company's
credit check,
credit check,
make
yeah.
sure that they can pay that invoice.
they can pay the debt, exactly. So now the debt's shifted.
Okay.
So they're credit checked. Are they good for the business?
Okay.
If they are, my invoice company will take that debt on.
Okay.
So you know what? They're good for the money. We'll give you 80% of that debt up front.
Okay.
Within 24 hours, upload the portal, upload the invoice, do our checks, blah, 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 done with it. And they'll pay you £800 tomorrow morning.
Right. So again, just to take things slowly, right? So day one, he's gone out there, he's done the cleaning job, he's
Completed work. Has to be completed.
He's completed the work.
Completed works, yeah.
He's invoiced the client for £1,000. Day two, that's been sent over to a lender, and the lender's given him 80% upfront, so £800 upfront. And then he's still got the other 58 days or however long for that.
No,
client.
then the client has the client's client and the lender have that agreement set up. They need to set up this invoice by this particular date.
Okay.
But obviously our client here, in this case, a cleaning company, has incurred a cost for this. So the lender will charge you a premium to process this for you because they're taking on that debt.
Of course.
So for them to do that, they'll charge you a small fee, a service fee.
Yeah, of
You know,
course.
percentage change depending on the industry, the risk reward.
Right.
But you need to park that to one side. The fact of the matter is you've got £800 in
Got
your
cash
pocket.
in your bank.
So now you've got £800 back in your pocket. Now you can go out and do another job and replicate the thing over and over again.
Do you know what? Talking about this client and his client being, someone in the government, right? I hear this quite a lot, right? There's people that want to work with these big contractors, like, you want to get a contract with the NHS or the prison services or MOD or whoever it is, right? You want a big client, right? But they just can't fulfill it. They just don't have the cash flow.
No, because these guys demand a lot.
Yeah.
The client, when you think of a large organization or a large client, they demand a lot.
And they pay quite late.
They never pay on time.
They never pay on time.
They know they can bankroll. They can bankroll you more than you can bankroll them yourself.
Of course. Yeah.
If they don't pay you after 40 days and they push you at 60 or 90,
What do you do?
what do you do? And some of these companies, without being rude, mate, they want you to fail.
Yeah, because then it's on the house for them, isn't it?
Exactly. And some people get really excited when you get a really big corporate contract.
Right.
Or you think, I've got this amazing opportunity. But then you bankrupt yourself because you haven't got the processes in place.
And that's really what cash flow is all about, right? Like, one thing I've taken away from running this business is the number one issue when it comes to businesses is cash flow, right?
It's cash flow. Literally, people say, turnover is vanity, profit's sanity.
Yeah.
So you have to understand where your profit's coming from. You can turn over millions of pounds, but not make a single profit, not a single piece of business. But then why are you working for it? Why are you doing it all?
Yeah.
It's understanding cash flow. So you can run a business which is, not profitable straight away. It's just a turnover-based business. Then it becomes, as long as you're covering costs and you're making expenses are being paid, it now becomes a different type of business.
Right.
But that only works by having good numbers and projections to go with it. And you won't get in trouble. And then that also leads back to, I assume thing when businesses get in trouble, what's the biggest thing they fall over in? VAT bills.
Oh, yeah?
Yeah. Because VAT's paid to you by a client, right?
Right.
Any B2B serviceable industry. VAT is paid. You're meant to retain that, hold it,
Yeah, of course.
and then pay it back to the VAT man.
Pay it back every quarter, yeah, of course.
But then if you've got cash flow challenges,
Right.
unexpected
And
expenses.
you spend some of that VAT, would you? Yeah.
Most people, traditional setup is, right, you have 3 bank accounts, don't you? Like you've got other businesses that you run, you have 3 bank accounts, right?
Yeah.
You have your current account where things run from, day-to-day runnings. Then you have your debt service account where you need to pay corporation tax or VAT, that money sits in a separate account.
Okay.
And that's normally in a high yielding interest account. So you're making money out of that money. So
Okay.
it's sitting there. And your third account's more future spending, like
Right.
acquisition costs, that kind of jazz.
So what you're advising is like business owners, they need to be well versed in banking as well, right?
Yeah.
Need to have multiple accounts where you're managing. So having multiple accounts, just a quick tip there for all the business owners, that having multiple accounts can help you manage your cash flow more efficiently. Is that what you're saying?
So it's like saving pots.
Okay. All right. So I think, look, on that note, one of the ambitions that we got with this podcast going forward is to speak to more people in business. Some of the people that you mentioned, right? So growth coaches,
Coaches,
yeah, accountants,
business coaches,
yeah. Look out for the accountant coming on soon. Yeah.
Accountants would be really good.
We've even got insolvency practitioners.
Insolvency practitioner. So if in business, things can often go wrong. Not everything's plain sailing. And it's good to have the right advice. So we're just coming from a point of view that, okay, can you watch this and understand this and see, okay, is it all going to work for everybody?
Okay.
And it's just collaboration. How can we all work together? There's enough business out there, everyone to work together.
Who would be your ideal business that you want to sit down and have a chat with?
Me? Yeah. Anyone wants to borrow money.
Thank you so much for listening. Hope you subscribe, like, comment below, all the good stuff. And yeah, keep an eye out for more podcasts to come on the ATZ Finance YouTube channel. Thank you very much.